Hey guys, thanks for joining us here on a Saturday afternoon. For those that are not familiar, the person next to me is not a man; he is a cat, a Cantonese cat, mind you. But no, not seriously. We are doing a fundamental analysis and technical analysis stream. We've done these. This is, I think, the third time that we've done this. Cat is a TA whiz, and there are times when I'm mostly a fundamentals guy where TA is really useful to look at the broader context, looking for entries, looking for exits, charting things like crypto, which can't be analyzed nearly as much on the fundamental aspect, and also price discovery as well. We're going to start off with the broader market. We're going to talk some individual names, and as always, we'll interact with you guys in the comments. So if there's anything that you have a question on, whether it's a fundamental or TA side, we'll try to hit it, though I might be doing a fair bit of I'm not sure or I don't know. Kat, how are you?
Hey, doing great, man. Thanks for having me on again. We usually try to do these things once every quarter or so, so I think it's about time, especially when there's a lot of questions out there if things aren't looking too great. So maybe
Yeah.
it's an opportunity to kind of just share thoughts and figure out what you're thinking too.
By the way, if anyone doesn't follow Cat yet, you can follow him on X. That is the tag right there. If you're interested in TA at all, or learning something new from that, I recommend the follow. Rapidly growing channel. You've had to reboot, and you're still 3 times as large as I am. So congratulations, you're doing something right. So macro thoughts, like on my end, let's look at the TA here in just a moment. We'll throw up a chart. I think mostly it's that we're out of the tariff bear case. There's still things to work out. There will still be up and down as far as roller coaster, but it seems like things are moving along well between the U.S. and China, which is the most significant. It's a little bit different environment than what we're in April. I think as those things continue to resolve, what tends to happen in bull markets is that we shift from whatever that previous wall of worry was that we're climbing to a new worry. And I think that at this point, it's related to the shutdown and also somewhat consumer health. We saw a couple of names report very weak, very concerning delinquencies and charge-offs as well, but they're related to very lower income, in some cases, not even U.S. citizens that were buying vehicles at extremely high APRs. And of course, we shouldn't be surprised when those things don't work out. But a lot of people read it as being indicative of the broader consensus. And then at the same time, we have the shutdown where we see, flights and flight zones basically being impacted. There are perhaps some bills that are on the way to at least fund critical aspects of the government, like FTA folks that are there making sure that all the planes land and they come in where they're supposed to. It's been a bit of a disaster there. So I think that that's what the market is mostly concerned about. If that gets resolved, or at least the can gets kicked down the road, which is really more what we've been doing these days, I think that the market will, find something else to focus on. But there is a lot of strength out there, and frankly, this has been a pretty healthy earnings season. We'll look at some names too, but names that miss or names that have run up immensely and ridiculously have tended to get sold off. So, case in point, Palantir, fantastic, the best earnings of any company I've ever seen, of one that I've followed. And at the time anyway, and they got sold off because it's priced a little bit beyond perfection. We'll look at that as well. But yeah, that's my fundamental view of the macro. Is things are there's some cracks, but things are okay. I think that likely that this pullback, we could even see like a 10% correction. It wouldn't be shocking, but maybe you'll look at that from the TA standpoint. But it's overall pretty healthy. It can feel frightening at times. But anyway, that's what I've been looking at right now. Let's throw your chart up, Kat, and why don't you talk about from the TA side as far as the macro fundamentals in the overall market?
Yeah, I think I just wanted to add to what you were saying. The reality is, all these things that you've mentioned, people are scared about the market is near all-time highs. This is S&P 500, it's a monthly chart. I'm not putting anything fancy on there. It's just monthly candles showing you that, hey, we're near all-time highs, and this is log scale. So if you zoom out, things generally go up, to the right. That's just kind of what generally happens anyway, right? So all-time highs happen, crashes happen. The reality is we're not at like a crazy inflationary period anymore. Like rates are not like the highest they've ever been for 4 or 5 decades. we're talking about world conflicts that's still going on, like Russia, Ukraine, but nobody's really talking about that anymore. All the Iran stuff is kind of like, just water under the bridge, apparently. Banks are no longer failing like they were in 2023. I mean, I don't know what other narratives there are. Like, we're not having any COVID shutdowns, tariffs thing is, now it's like definitely it's like a negotiation tactic. I think there's a lot of negotiation behind the scene, and the market just keeps on grinding higher. And these kind of like April's scary stuff that was, everybody was scared about tariffs, that really caused a great deleveraging of the whole entire economy, of the whole entire stock market, and that has allowed us to go higher. This is kind of what happens over and over again, right? 2022, right? That little bleep right there, everybody's scared back in like October 2023. April 2025, these things generally happen once every year or so. So I don't really think there's anything like, worrisome or anything like that. I don't really see us being like the edge of the edge like a great financial crisis or dot-com bubble or anything. Where do you think we are, man? I mean, people like to pull up this chart here. Roy, where do you think we are?
I mean, like I would. This can be a very useful stock to understand. Fear and understand greed, and humans are humans, and even though things will change in the market over time, people are people, and a lot of the market is psychology, so it is very valid there. I am guessing, and it's just a guess, I could be wrong, but I've said this I think since 2024, very early, that we're going to be in a persistent bull market maybe through 2029. I think anything can happen to derail this. Things can always pop up in the macro, and like consumer weakness is really the one to like focus on right now. But I think as far as on the employment side, there's not going to be massive pressures maybe until about 2029, when you have the confluence of AI really driving job losses. Right now, there's just a little bit of it. It's not much. Most which are read as AI are really just typical for any year or any company. A little bit abnormal in October. They had higher job losses than I think any point since like the dot-com bubble, which is never a comparison that we really want. But I don't think that we're in a euphoria. There have been times when we've hit euphoria, but if you look at the fear and greed index, it's been more closer to fear or extreme fear. The thing is, like, this has been a very hated rally, and a lot of institutions, and there's a lot of mega people too that just haven't participated. That they've been underweight tech names, they've been underweight crypto. I don't know how they miss those fear narratives, but they have, thinking it'll pull back or sell off, or that we'll have more time to add, and they've just been wrong and on the offsides. And at this point, I'd have to find this. I bookmarked this a while ago, but hedge funds are by and large underachieving mass. Oh yeah, here it is. I'm going to remove your thing here.
Please do. I want to see it.
Add if I can. This is from Kobayashi letter, and he has some good macro stuff there. But he noted this: active managers are underperforming in 2025. Just 21.9% of active funds have beaten the market year to date. That isn't beating you and I. That's hard for them, except on bear years. But that's beating the S&P 500. So, like, a lot of people begin to question active fund leaders and hedge managers as well when these guys are underperforming so badly the S&P 500. Which, I mean, even if you're a very novice investor and you're new in the stock market, you can find a way to buy the S&P 500. Some very easy, popular ETFs out there that SPY is most paramount. And so, like, you're like, okay, why am I paying guys to undermanage my funds and do terribly? And so, we can see here that here's the chart. This is not a good look. So, if we were, let's say, up here at the 60, 70, 80%, and everybody's calling for everything to go to the moon, that's when we're in a euphoria. But let's pull back up your chart here. And this is a good one to always bring out. Yeah, I would say that we're probably actually maybe more in. I think there's two different minds. Retail is probably somewhere around optimism and belief. I know that there's some that are on the other side of it, not that always. I think a lot of institutions and massive people are in disbelief right now. And they have been really, frankly, since 2023, thinking it's a sucker's rally.
Are you saying that retail's smarter than institutions.
I would say retail is more agile than
Yeah.
institutions. Institutions tend to be obdurate, and so they go with what works. They go with what they understand.
Yeah.
There are certain narratives that are closer to the ground for retail, like we see it in
Mhm.
daily life. The impact, for instance, what's happening with ChatGPT. Some of us, at least, the impact that what's been happening with crypto. Retail was all over that much earlier than institutions, and of course, we'll talk BMNR and maybe strategy
Yeah.
and some of the crypto names here in a bit. But retail can also be more fickle. Now, retail has a great habit in bull markets and a terrible habit in bear markets of buying the dip. That can be great, and it has been. Like if you look at April when all the tariff woes were hitting, retail was buying up that dip. Institutions were getting the sidelines. They were having a lot of hedges. They were very cautious there. Now, I myself, I bought the dip cautiously. I expected I'd maybe spread out my buys over several months. We didn't have that much time. We had a V-shaped recovery. So retail can know some things better and outperform hedge funds. I think over time, the larger funds will probably outperform, but I think it's a bit of a misnomer to say retail is just dumb money. We're a lot more savvy these days, and it's thanks to guys like Cantonese Cat and other providers too, which I think really retail has learned to listen to and look at and consider, not just to blindly follow into things, but use that as a way to be aware of opportunities that you might not otherwise, but also to maybe pick up some things that you were overlooking otherwise. So where do you think we are?
Yeah, I mean, I think that there are. Well, I mean, I feel like we're probably around like optimism. To be completely honest, I think that's where we are at right now. We're about to break out, and there are a lot of people that don't really believe in it, and they feel like you said, like a lot of people fall here in disbelief. The reality is probably somewhere in optimism. A lot of people are pointing out that we're actually in complacency, which I would argue against. And I think I don't know.
Yeah. So there have been like brief spouts of euphoria, and you see that when you log on X or whatever social media where there's actually stock investment happening, where people are like, "Oh, why would you invest in some stock that's only going to go up 40% this year?" Okay, that's euphoria, and there have been pockets of that this year, but it's not been. There's only been one time when it was like really widespread. That was earlier in this year, and there was a pretty nice pullback off of that. Right now, I would say that's not been the case. I've not seen it. All of the year-to-date green screenshots or anything, but we're also not in a massive fear wave either. So, yeah, I think you're right.
Yeah, I mean, I think the clue to me is this. I've been pretty bullish on the market. I can show you like my Charlie Day stuff where I'm just trying to stitch a bunch of stuff together and trying to showcase in terms of like why I think we're still early, why we're still around optimism. But the reality is this. I'm pretty bullish on everything, like on your Ethereum, on Tesla, on Palantir. Whenever there's like a big down day on those high beta assets, we get hated. Like the bulls get hated. That's not euphoria. That's not thrill. Everybody's going to be like, buy the dip, buy the dip. I mean, we've been there just a few years ago. This is not what we're feeling right now. So I feel that we are here around here anyway. Probably still got some ways to go, but that's kind of where we are. But I'm hearing a lot of people saying complacency. So I do want to pull up one thought here in terms of what people have been having complacency issues with is gold.
Yeah.
Everybody's been like, buy gold, buy gold. It's been going straight up for like the last 3 years. Like this, to me, I think that's euphoria. When Peter Schiff's like just coming out here and basically just talking trash on everybody, like that's euphoria.
Yeah.
The reality is like it's hitting really some major resistance here. Here's my FIP channel, where it's hitting basically the previous FIP level here. And then here's another, if I do like, this is like the log scale, this is like the linear scale. Linear scale is hitting, like exactly where it was, where I kind of drew it. The regular Fibonacci level is hitting on 2.272. Usually 2.272 log fib is like a pretty strong resistance level, and gold hit that. And then if you do a linear scale, it hits like 3.618. So all of these are like I'm not saying that it's not going to go higher. It can always go higher, but at some point, I think there is a lot of complacency when it comes to the gold market. Whereas things like, the things that really haven't started running yet, like the small caps, represented by the Russell 2000 IWM here as the ETF that is representative for that, it's really been doing nothing for like 4 years, and everybody is complacent in the fact that they think that it's going to continue to do nothing because it has been doing nothing. And everybody's been saying that, hey, like it's been doing nothing. Why would you expect anything different? Tesla has been doing nothing for 4 years. Why would you expect, oh, it's just at the higher part of the range, it's going to range bound between 200 and 300. We know that there's like a major influencer out there that's saying, oh, it's not going to, Tesla's going to break like, 300 or whatever, it's going to range bound forever. You're talking about like Bitcoin, it's been doing practically nothing for a whole year, and everybody's scared that the bull market is over when it's still kind of holding, some pretty key support. You talk about Ethereum that's been doing nothing for 4 or 5 years, and it's going to continue to do nothing. That's the gist of what I'm hearing. That's complacency to me. The reality is it's forming a really, really bullish formation here, right? I mean, like this is like a big, you don't have to be like a big TA guy to know that this looks like accumulation. This looks like accumulation of backtest. That's what I'm seeing, right? But I feel that based on a lot of comments, I'm sorry, a lot of people people love commenting weird things on my posts. So, but the whole thing is like all these things are basically showing you that it's a big accumulation range and something big could happen. Could it happen to the downside? Sure. I'm not going to be absolute and say I'm going to be right. It's going to go to the moon. But the reality is that global liquidity has been going up, and gold has been going up like crazy. There are pockets of the economy and pockets of assets that really has been soaking up all of these different liquidity, and they haven't really been released yet, in my opinion, to all of these different assets that have been accumulated for years by big money, by things like that. The reality is whenever you have an asset such as gold that has done really well, and something like the Russell 2000 or small caps that represent more like high depth companies that are not going to do very well if the economy is it's in trouble, or if there's going to be some kind of liquidity crunch or something like that. The reality is this, right? Gold has been trapping liquidity for a very long time, and then IWM has been accumulating. There's a lot of deleveraging that happened. Everybody gets suckered into not believing IWM is going to do very well, and next thing you know, it just takes off for like a year or two. Right? Same thing here. And then whenever gold becomes euphoric, it stays about the same, right? Same thing here. Trapped liquidity over here during the concerns for inflation and all that. Everybody was talking about in August 2020, that gold is going to go a lot higher because inflation is going crazy. Guess what happens, right? Inflation kept going crazy and gold did nothing. And the liquidity got trapped here, and it basically had to release somewhere else, which then released to a lot of the small cap stocks, a lot of the unprofitable companies, a lot of SPACs that came out around that time. A lot of liquidity was rotated over to gold, right? What are we seeing here? IWM, small caps, Russell 2000 done nothing for about 4 or 5 years. Gold's been going straight up for like 3 years. There's a lot of liquidity trap that I think is, same thing. You look at Bitcoin. Usually whenever you have the gold kind of rotating into more risk-on assets, Bitcoin does really well. And that just keep on happening over and over again, right? Here, there's a mother loads of liquidity that's being trapped in gold right now, and Bitcoin has been doing like practically nothing for about a year and a half. I just, I'm more leaning towards more bullish because of that. And matter of fact, I actually think that a lot of these risk-on assets are very much correlated. Both Bitcoin and Russell 2000, they're very, very, people say Bitcoin correlates with like the NASDAQ. I don't think so. I actually think that Bitcoin correlates a lot more with Russell 2000, because that's really where the true euphoria, the true risk on, stuff really comes in. And both of them have just been kind of going sideways, and they're really doing nothing. So, I mean, I can keep going on and on. Even ARK Fund, I think that tells you, like, I think this is more optimism than anything, as opposed to, like this is like a perfect like area there. I think it's just a little bit of peak right there. And if you're also looking at ARK Fund, like it just broken out of a channel. And last time when it broke out, the last couple of times, that's when ARK Fund does really well. That's when Bitcoin also does very well, right? Things like Tesla, things like Coinbase, those kinds of things belong to the ARK Fund, and they just starting to kind of form a good base and just starting trying to, break out here. And this is kind of what I'm seeing here. Now, I can keep going, but I'm going to take a pause right there. I want to hear what you think based on all these different things. I talked about like gold, I talked about Bitcoin, I talked about IWM. What do you think?
So let me remove that there, and I'll throw this up. So just on gold specifically, and really you could use this for silver as well. It's on a nice rally. I have some silver. I sold a lot of my silver, bought more equity in crypto as well. Don't regret that. But anyway, there usually is a fundamental reason too why things move. And gold tends to not move in a straight line. It tends to go through spurts, depending. Usually it's a risk off asset. So it's interesting to see that at a basically a huge all-time high, despite not really being in risk-averse territory. And a lot of that is, this is, from August, but nothing has really changed, that gold is being accumulated rapidly among foreign central banks for a variety of reasons. Some we don't know, some we do know, versus U.S. Treasuries. And so it's actually overtaken that as well. And that has continued to accelerate since August, the end of August as well. So, like what you said, it can go higher. It might go higher, but that's definitely a euphoria market, because you can see the way people talk about gold, especially if they're in precious metals, that they're at all-time highs, and so are their emotions as well. The rest of the market, I think that the market tends to do that, where it sleeps on certain plays that have not moved much in a while, but it can happen on individual tickers. It can also happen on crypto. We've seen it like every single cycle. It will do this, where people think sometime in the bull market, it's like, okay, the bull market's probably over. And at some point it is, but that they think, oh, this is not really going anywhere. We go after more interesting plays. And then when it's euphoria time, which is where we were last year at this time, that's when everybody's like, no, they put out like ridiculous price targets, not just certain individuals like Cathie Wood, but you can see euphoria. People are buying it up. Lots of companies are talking about holding it on their as far as like not becoming necessarily a digital asset treasury, but holding it on their balance sheet. Those are times when you're like, okay, yeah, this is definitely euphoria, or at least really close to it. And so like specifically, probably Bitcoin, it would be really useful to see a chart of just overall, because I think we're both in agreement that it's probably a little bit early for crypto winter, but I'm curious, A, where you think Bitcoin might go this cycle, and B, when, if you were to make a guess, where winter would be, and also related to that, Ethereum/BMNR.
Okay, let's do this. Yeah, if you want to flip over back to my screen, I posted this chart here yesterday. And I can show, a lot of other things, but I don't want to get into like too technical. I want to just basically line up and talk about cycles, because I think most people relate to economic cycles than the actual like indicators. Like, who cares about Ichimoku cloud except for Vlad, right? I mean, but the reality is that this is what I'm talking about, complacency. There is a widespread thought that altcoins only lose you money now. Like, if you buy into altcoin, because you're just going to keep like a million of them, like you're going to keep diluting the whole overall crypto market. Like, you're never going to see altcoins go up ever again. This is it. Crypto's a scam. Just buy Bitcoin. Bitcoin is the way to go. Ethereum's trying to break into all-time high, but it just gets smacked down 30-40%. Just stick with Bitcoin, right? Bitcoin keeps on going up, and altcoins keeps bleeding against Bitcoin. Well, the reality is that is the pervasive narrative right now, and that is what I would refer to as complacency, because there is actually a way to chart Bitcoin, and what's the percentage of the Bitcoin, what's the percentage of crypto market cap that actually belongs to Bitcoin. We call it Bitcoin dominance, right? It's around 60% right now. So 60% of the whole crypto market belongs to Bitcoin, which is relatively high. At the beginning, it's close to 100%, but as you have more altcoins, Ethereum really start become dominance around 2017, 2018. And then Bitcoin, there's a lot of rotation of capital away from Bitcoin to altcoins, because the risk appetite had increased. At the same time, when Bitcoin dominance drops, when the capital is going to altcoins such as Ethereum, such as XRP, what have you, Bitcoin actually does really well too, because there's just a whole flush of capital going into the system, right? So as Bitcoin dominance drops, Bitcoin actually goes into parabolic bull phase, right? The same thing happened the last cycle here too, and we've seen 2 different cycles here doing 2 exact same thing. When you have people kind of trashing Ethereum back here, like Bitcoin started kind of go up here, Ethereum did nothing. Eventually it catches up. Eventually Bitcoin dominance did end up dropping. And Bitcoin had a pretty parabolic rally over here. Matter of fact, altcoin kept on going until the end of 2021, and Bitcoin just made a slight higher high right there. So the complacency thought would be right now is Bitcoin dominance is going to keep going up forever, or at least it's going to stay the same. But the reality is, I think we are seeing a little bit of exhaustion here. I think we are seeing that, it is trying to make a higher high here, but it's not able to, right? Because you see these wicks over here, and you don't have to be like a TA expert. And I'm not a TA expert, by the way. I just like charts. You don't have to be a TA expert to really say that, oh, it's getting rejected here. You see these kind of wicks over there. Well, yeah, it's trying to go up, but it's not able to make that higher high, right? So the trend seems to be a little bit exhausted here, kind of like what it was over here. And I think we may be at the cusp of having a rotation that is brewing. When that rotation happens, this over here took about like 10 months or something like that. This over here, it just kind of kept on going for like a whole year, until Bitcoin tops, right? We haven't really even seen Bitcoin dominance dropping yet. If we haven't really seen Bitcoin dominance dropping, I have a hard time really thinking that we're at the euphoric stage and that this is just complacency. Because you have a lot of people holding these, these other, alternative coins, altcoins, or whatever you call it, but they haven't really been doing anything, but they look like they're in accumulation range. And it looks like Bitcoin dominance is about to change its character. And that could last for a while. That could last anywhere from like 6 months to a year, right? The other 2 things, go ahead. Yeah.
One second. There's a question that's relating to this. So if you're reading these, can you say how you distinguish between stagnation and accumulation? Like on ETH, doesn't have to be on ETH, can be a Bitcoin. For example, people make different arguments with the same price action, and it confuses me.
Well, I mean, I think you have to take into consideration, that's why I'm showing you cycles. I think to believe that and I think that it ultimately ties to, liquidity. It ultimately ties to, and there are 2 things, right? One thing is Bitcoin has gone through many cycles already, right? So has a lot of other assets, like IWM, which is Russell 2000, it's gone through many cycles already. So there's a cycle behavior, right? And it keeps on making, for the most part, higher highs and higher lows. It makes on the different cycles. I would argue that ARKFUN has also gone through enough cycles already, and I think we're just starting another cycle. There are some things that are just not going to be cycle dependent. There are some, like, if you're talking about, I don't know, like, what is it? What's that? Well, I mean, that doesn't have cycle yet, but you're talking about like cannabis. I forgot what the ETF is for cannabis. So it just keeps on going down, right? So there's some things that haven't really been proven to have cycles, some things that have been proven to have cycles. When it comes to something that has a cycle, you can look at, that whenever it is going for a bear market, that's accumulation for the most part, right? Because it's done that before over and over and over and over again, right? And it's doing that again, right? And that that's the case because the US liquidity just keeps on going up to the right. This is log scale. This is how they print money. It's been trillion and trillion dollars of US money supply that's just being printed over the last few decades. And it's going to keep going up, right? So if there's increasing liquidity, they have to go somewhere. And if it's going somewhere, it has to go somewhere that sometimes gets a little bit euphoric. Sometimes it doesn't. And sometimes it goes through accumulation. And sometimes they go through distribution where they're trying to send money out to, or try to distribute the assets to at higher prices. That's what happens over and over and over again, right? When you talk about Bitcoin and Ethereum, I would argue that if you look at Bitcoin here, it goes through these cycles over and over and over again. You can even overlay something like a Gann square chart here, where it gets rejected, goes through accumulation, and then breaks through and gets rejected at the next level. And it just keeps on making these cycle highs and just keeps on doing the same thing over and over again, right?
Yeah, and we've not seen that blow off the top rally yet.
Right.
So it'd be a weird end. Usually there's a blow off the top rally, and like you said, altcoins tend to have a rally too. And that's when you see crypto winter. So for me, I'm thinking sometime next year, there's a good chance for crypto winter. Maybe in the second half, could be earlier too. Where do you, if you were forced to guess, because I'm going to make you, where would you guess that crypto winter might hit?
I think the chart that I was showing between this over here argues that not just Russell 2000 but also Bitcoin, because there's so much fear and so much liquidity that's being trapped in gold right now. And on top of that, because there is a lot of liquidity that's being trapped in the international market that hasn't really been rotated to Bitcoin. This is the Nikkei, right? Pretty much every single time the Nikkei goes up, Bitcoin goes up along with it over and over and over again, right? These are what we're talking about, cycles. The Nikkei's been going up like crazy for 6 months. Bitcoin's been going sideways. I don't know whether or not they're not correlated anymore, or is it just something is holding Bitcoin back, and this is like a bullish divergence that eventually is going to rotate money into, right? The other chart I also want to show too is the Hang Seng Index, right? The Chinese market. You're talking about liquidity flows. The last time, everybody's scared that this is like the same thing as 2021. And again, I'm not arguing that they could very well be. I don't know, right? But there's a little bit different behavior between this time versus last time. Last time, whenever you have Bitcoin making the exhaustive top right here, you already see the Chinese liquidity is leaving. Like it was the beginning of a bear market and it was going down, right? Here you can see like the Chinese economy, they keep pumping money into the market. Like you can see it's just been going up in a straight line, higher highs and higher lows. Bitcoin has done nothing during the entire time, right? So there's a lot of international liquidity that still hasn't pumping into the system yet. On top of that, we're talking about stopping quantitative tightening, right? I think that a lot of people are thinking, okay, 4-year cycle, this is it, pack up and leave because it's just like last time, when the reality is that the conditions are not like last time. And then on top of that, there are a lot of people thinking, okay, so maybe 5-6 months max, right? As opposed to having all these liquidity being trapped in the international market that hasn't rotated into Bitcoin yet, as opposed to having gold that has a lot of liquidity being trapped that hasn't rotated to Bitcoin yet, as opposed to a lot of these other stocks that's been making like really crazy highs here that haven't really rotated to Bitcoin yet. And Russell 2000 also still hasn't really ran, right? So all these different things are telling me, hey, maybe we're looking at something that might last a little bit longer, because we're following a lot longer base for both Bitcoin and for both Russell 2000, that it might run longer than 6 months. I don't know. I think we have to take one step at a time because, like you said, anything can happen. But it just seems like liquidity keeps on flowing up to the right, but a lot of things that are more risk on just hasn't really ran yet, and a lot of people are still complacent that they're not going to. So I'm gonna keep some skepticism here and saying that I think things will probably break out maybe 6, maybe a year.
Yeah.
I do not know. And if you're asking me to like speculate how high Bitcoin can go, I'll say like 200,000. That would be my guess, because I see a resistance level right there. And that's and that's just
from here, it's roughly a double. So that's a massive blow off the top type of rally.
Right.
If we're going to see it like in the terms of previous cycles. So also fundamentally, so I think TA is a lot stronger on crypto just because there are fewer fundamentals, but there are some that we can look at. One is, of course, the way that the government perceives crypto. So previously under the prior administration, SEC stood for Stop Everything Crypto. Now you have a president that's launching meme coins. Now, I don't like all of that, but I do like things being more open towards cryptocurrency. And it's one of those things where the government actually understands, basically where we're at, that most of the people that hold, so stable coins are growing rapidly, and more than half are built on Ethereum. It's one of the reasons why a lot of people, including myself, are bullish on Ethereum, and also BMNR or other digital asset treasuries too. But the thing is, the government realizes, okay, stable coins are backed almost all through U.S. currency. And of those, almost all the backing comes from 3-month treasury yields. So that's great as far as a supply side or demand side lever for the U.S. government that's issuing debt, even if that's short-term debt. And also, it's really good because it perpetuates dollar dominance on the global scale, since most holders are foreign. So the United States has said, okay, let's actually get out of the way of this. Of course, there's the Genius Act. There's a Clarity Bill as well. We'll see which one passes, what tweaks that there are as well. But this is a very, very different environment. And coupled with that, you have banks that are wanting to get involved in crypto and are to a certain extent, and that will increase over the next year. At the same time as you have, of course, major ETFs for Bitcoin initially, then Ethereum and others as well, which are accumulating. Institutions are buying it and holding it. And so you have a lot of demand, a lot of accumulation, and that tends to do things over the long term in terms of share price. Now, the last thing I want to share here, oops, that's yours. Let me remove yours and let me add mine. This is just showing Ethereum's on-chain volume. And this relates to altcoins too. Ethereum, of course, is where most of the stablecoin action is actually happening. And you can see, there are peaks and then there are valleys as well. We're not seeing anywhere near a peak in terms of demand, but like things that are actually being built and used, it's mostly Web3, but there is increasingly so real world assets and real world things that are actually happening, a lot of tokenization as well. And so volume has increased. Now, one of the things that kind of hides this a bit, this is a level 1 chain. And so you can think of this as like a super highway. And to add some functionality to also help with volume constraints and also help with gas fees as well, there have been level 2s, which you can think of are feeder roads or side highways that have been built out there that they eventually do fork back and come into the main freeway. But a lot of the action that's happening with Ethereum is happening on chains that are layer 2s, like Arbitrum, for instance, the first one that came to mind, which is going to be used for a ton of Ethereum type of projects as that layer 2 chain. So the idea that alts are all bad or done with is really silly. Stablecoin does replace some of the functionality, and the memes have always just been memes, but there is some actually quite a bit of real world utility that's happening on layer 2s and will continue to. So I think next year is looking pretty reasonable in terms of a crypto winter. And this crypto winter, by the way, like if you look at the price action and everything, the more the longer and the older Bitcoin is, the more stable it tends to be for a variety of factors. And so this winter might be more shallow. It probably will be more shallow than the previous one, and may last less time as well. It just depends on what the macro event is that threw it in that.
Yeah, the less euphoria that we feel, the less likely the brutalness that we're going to feel when winter comes,
Oh, yeah.
I think one thing, and again, I just here to show you that, Ethereum goes through cycles here as well. And they basically behave pretty similarly. Before they run up, there's usually a deleveraging event that get everybody offsides, take out all the stop loss that the people have. And also if they use like margin or they borrow against their Bitcoin to buy Ethereum, or if they use like any kind of like 100x leverage position, they usually want to liquidate those people before they run up. That happened during COVID here as well, even though the trend seems to be up, right? But there's a deleveraging event that tends to happen. And then when it breaks above a critical zone, that's when things go bonkers. But before they do, they usually have one last deleveraging event. I think that's what's happening right now. We got a little bit of deleveraging event that's happening right now. It is what it is. I think people are probably a little bit too euphoric, a few months ago. And so was I. I think that the thing is, nothing has really changed, based on my thoughts in terms of what Ethereum is going to do over the next 6 to 12 months. Because if you're talking about fundamentals here, I think a lot of people forget that Ethereum is basically programming. I think a lot, like it's basically it's something that you can write smart contracts on, right? So how does that fit into the AI narrative? Programming, when you hold a token, it gives you the right to use a network that can be done internationally, relatively decentralized. Some would argue differently, but relatively decentralized. You can do these things called smart contracts, which are basically your favorite jam, Fintech. If you hold a token, you have the right to use the network. How does that fit into AI narrative, Roy? What do you think?
I mean, yeah, like it's one of those things where it lines up very nicely with what's needed. Of course, there's already built in Ethereum. I would say like really it's stablecoin more so, but like you can do things directly with Ethereum as well. But the Ethereum is like the super highway, and there's no there's a, you know, you can look at Solana and you can do things with like the Bitcoin Lightning Network and stuff, which is layer 2, but there is no other chain comparable to Ethereum in terms of like it's more decentralized, far more decentralized than Solana, even though some Solana bulls would disagree. They're flat out wrong. They term decentralization very differently than the standard definition. There are some good things about the Solana network too. I own some, so I'm not like bearish on it. But like this is where institutions are going to build, and they are building because 100% uptime, decentralized, well understood, mechanics are well understood. It's basically flat in supply since late 2022 because of the burn rate as far as gas fees that are there. And so there's a lot of things that are lining up well, along with demand, institutional understanding, and also regulation. So with Ethereum, by the way, if you don't mind, pull up BMNR. And do you care anything about Bitmine? Or at the very least, can you chart and tell us where we're going? Because us bulls are like, okay, I didn't think it was going to be nearly as rapid price accumulation because they're trying to just accumulate that 5% Ethereum first. And a low Ethereum price is beneficial to do that. But at the same time, we have to understand, like, at least in terms of price, I thought we'd be in the 50s. Now the macro has been a lot softer. So where are we going from here?
Man, that's a tough chart to look at.
Yeah,
I would say this in general because like when did Bitmine become the Ethereum treasury?
it was late July, early August.
Yeah, so it just happened. I think this big giant candle over there in July, where it has a big giant wake up above, and before that, like you can argue like the before that is crap, right? I don't know what Bitmine was when it was like, you know, before it got you know, reverse split or whatever. I don't know. But
kind of a Bitcoin miner treasury thing. So yeah,
gotcha. Well, I mean, if you're looking at this here, whenever they became an Ethereum treasury, right near the peak of Ethereum price, which was probably a bad spot to have bought. Like if you bought in the triple digits when it's way above the, you know, monthly bullish band, that was probably not the wisest thing to do because you know that no matter how bullish a narrative is, if things are just that overextended, like you don't have these kind of candles that are just way outside the upper Bollinger Band and don't expect a pullback and don't expect some kind of pain, right? I mean, I can show you like what the classic example was, like the monthly, the monthly candle from you know, like MicroStrategy, the top candle from MicroStrategy, like that right there. Like you don't buy that. That's just not the way to do it, you know. Now the question would be, okay, so I didn't buy that, and I hope you guys didn't, because if you did, then you have been trapped. But then what happens next after that? Well, things get pulled back closer to the Bollinger Band because these are basically a way to calculate, you know, like standard deviation. It's like 2 standard deviation above the mean and below the mean. That's basically what it is. You know, when things are just like 2 standard deviation away from like their 20-month moving average, is just way overextended. We're not overextended anymore. We got inside the Bollinger Band. Meanwhile, you're also losing a lot of, you know, like the initial momentum here. We're cooling down, right? So it's really hard for me to say, you know, I can pull up the Ichimoku cloud, but that's also getting calculated by a lot of price action before it became an Ethereum treasury. So it's hard for me to say it did enter the cloud and follow the cloud. Like what it means exactly, I don't know. I do think that like $82 up here, these lines up here eventually would mean something because these things are usually all algorithmic driven. But I don't know like exactly how to, you know, really truly draw that. All I can say is if I'm going to do, you know, like a fit level, I can do one that is from, you know, right before and right after they announce Ethereum being an Ethereum treasury. I can do that. And if I do just look at the weekly here, and this is like a lock way to draw fibs, right? You can draw fibs using linear, but I would argue that if you use linear scale for something that explosive, you know, to the upside and to the downside, you might miss something. Now, if you use a linear scale, it is stuck between 2 fib levels, and we did end up closing the week slightly below this, you know, 0.236 here, but it's basically just stuck in a range. That's all it is. Like it's getting rejected here. Couldn't go higher yet. Ethereum's not breaking out. It's also like not breaking down that much lower. It had a little bit of false breakdown there too, right? So whether or not this level means something, I don't know. But for something this like volatile, I usually like to look at log. And when I look at log, I see 0.618 and 0.786. being the fib level that's being stuck at, right? So there are people that sell here, and there are people that are buying there. That's basically all I can say. Usually, when things are at these two fib levels, it does signify more reaccumulation than distribution. And that's all I can really say, which makes sense from the greater context of things in terms of if we think that Ethereum is done, or if we think Ethereum is just kind of getting started for like the next few months rally, right? To me, this looks like reaccumulation, and that's pretty much what I can say. It's near the bottom of the range, so the risk reward ratio seems to be better here, and I think that's pretty much to the extent that I have for TA.
All right. So one more related to that, because I've seen this from a few folks, I think on your side, is strategy. So a little bit better history, longer history as well. What's the chart looking like to you?
Oh man, that's a tough one.
We'll get to some easier ones here, and we'll speed things up. I've got some big names that fell during earnings, and some names that I hold too, where I'm curious on. And then some questions in the comments too. So feel free to throw your questions in the comments, guys.
Yeah, I mean, I can say this right now. A lot of people are scared that the MSTR has peaked, and that it's going to go through a bear market. I have two arguments here. One is the last time when it kind of broke below the 20-month moving average and have a bearish backtest, that was it, right? And then it just goes down, right? Because it couldn't break through. I would say that a lot of people are saying like, where we're at right now is very similar to where we were here during this peak. And I would say that I see the valid argument. I see it being a potential valid argument. The only thing is I still don't think Bitcoin is done yet. I still think that Bitcoin has more room to go up. So I don't think that the best risk reward ratio is going to be at something that has ran up all the way for the last 3 years from like $12 all the way to $500 anyway, right? Like that's not the best risk reward ratio that I'm seeing. And I can see that it has relative weakness because things are rotating out to other things, right? One that I see probably had a better risk reward ratio, and we talked about this before on our last stream, is Coinbase, right? Coinbase has a chart that looks better because it doesn't really have that exhaustive look. It looks like it's making it looks like it wants to push higher, right? So I think that that's basically what I'm seeing here with MicroStrategy. I'm not saying MicroStrategy is going to go down from here because I still believe in Bitcoin, but I just think that maybe there's a little bit of rotationary forces that are going on behind the scene because Coinbase also building a lot of like, really interesting infrastructures and things like that, which I'm sure that Roy can talk a lot more about than I can. So.
Yeah, I think that's really helpful, especially to look at. Yeah, Coinbase is cooking up a lot of really interesting things, and really, I think that's all tied to when you think crypto winter hits. If crypto winter is hitting in the next month, then all of these things that we've talked about are going to go down. That's the way it is. Yeah. But if it's staved off longer, usually when you want to buy crypto and crypto related names are when people are exhausted. When people feel like it's not going to go anywhere, where it hasn't moved, where they say it's better opportunities, that's when crypto tends to surprise, not when like everybody's like, hey, it can go up another 10% this next week. So that's where I think that we're at. For me, I just keep it really simple with BMNR. This is actually the first week that I've not bought BMNR, despite the price. I'm underweight in cash, and I'm like, let me save that up. But I'm continuing my Bitcoin DCA, which is like, regardless of where the price is, I'm buying a set amount. It's a set amount of my income. And, I'm going to probably do that for 5 years. So if Bitcoin is trading at $1 million, I'll do that. If Bitcoin is trading at $1,000, I'll do that, and everywhere in between.
Yeah, and I think you have to be able to handle the volatility if you want the exponential gains when it comes to these kinds of really, I mean, like, we joke about like we're in crypto because of the tech, but in a way is actually true, especially during tough times like like what you're experiencing, and the sentiment is really horrible. On the left here is Coinbase, on the right here is Ethereum. These are monthly charts. They're very similar. You see basically Ethereum is basically backtesting a zone over here, and so is Coinbase. But during this backtest, I think people are very disproportionately bearish and scared. And I don't really understand like why that is, because when it comes to technical analysis, you look at trend, and trend's your friend. If things make a higher high and they're trying to make a higher low, the time to be scared is not when things are making a higher low. the time to be
Oh, yeah.
scared is when things are at the highs, but right now things are trying to make it higher or low, and nobody knows how low it's going to get. That's actually a time to remain positive unless if the trend changes, which currently there is no sign for that. So,
all right. So I'd love to pivot into some equities side and where I could talk a little bit more about fundamentals, and I'd love to hear your thoughts on a lot of names. There's been some. Let's start with some fallers, if you're good with this. Some names that maybe got hit really unusually hard, which I could talk about maybe the reasons why, and then what I'm seeing or thinking, even if it's not something I know well, and I'll say that, and then you can pull up a chart. So let's do Fiserv first. I know it's not a name that anybody's asking for right now, but I'm genuinely curious. Fiserv has existed, continues to exist in a needed niche. I think that they're going to be around a long time. It's a newer CEO, and he kind of had a kitchen sink earnings. And so a lot of the expectations that were there by the prior leadership and management had to be reset. They were doing some things wrong that they needed to correct in a hurry. They had been using debt for acquisitions and also to kind of finance their buyback. Now, they technically could with just their free cash flow, but they have some other things that they were doing too. So they were racking up a lot of debt. And so CEO came out and reset a lot of people's expectations. That stock was down a ridiculous amount on earnings. And so I'm kind of curious if we look at, no, not Pfizer, FI, sorry.
Oh,
I was like, that doesn't look like its chart. Where's the
why do you look at Pfizer? Ooh,
there we go. There we go. See, look at that volume and that, like, this is just, it's a really interesting chart to me, and I have no idea what to do with it. Like, for me, my answer is, I think that with the new CEO of a legacy company that's trying to do a turnaround, it's like Alex Chris and PayPal. It's like Brian Nicole as he moves over to Starbucks. It's the eternal guy at Nike that they hired. It takes usually a couple of years to turn things around. And I think that the market will probably wait on that. Now, Fiserv looks pretty cheap. Cheap can always get cheaper as well. So for me, I'm already in too many payments anyway, so I'm staying on the sidelines. But I'm very curious. What do you see in the chart?
I wouldn't get into it just because it's hard to know. If you have to get into it, like I can show you in terms of why things are doing what they're doing. Because I guess the earning was so horrible that it just couldn't hold. Like even the 0.786 here log fit support, it went all the way down to like the 0.618. And I drew this fit just now. Like I never looked at this chart before. This is how technical analysis works. You just draw fit levels at important pivots, right? I used this all-time high here, and I used the low all the way back from the great financial crisis. This thing has just been going straight up here with some, peaks and valleys here. But yeah, I drew this, and then I do like a log fib, and this is why I'm seeing it went to 0.618. And that's where it's finding support here right now.
You got to love it when it just lines up. Like you didn't do it that way intentionally, but like it just lines up. So we'll have to see how it obeys the Fibonacci's there. But
yeah, it's like the Fibonacci is it's everywhere, right? It's in nature, it's in human psychology, it's in all the algorithms that people use. And you just put up, it's finding support. Would I buy this falling knife? That's the question. Depends on what you're buying it for, I think.
Yeah, that's fair.
If you're buying it to trade, if you're finding an important fit level, you think that the initial capitulation has happened, I think it's okay. It's probably relatively less risk to buy a candle. It's just like BMNR when it was way above the upper Bollinger Band on the monthly. When this is like way underneath the low Bollinger Band here on the monthly, I would expect sometime soon, especially at the Fibonacci level that spans decades, probably find support here, probably end up having a little bit of a bounce. Let me see if there's any like buy order here too. There's some below, so it might go lower. But you would expect maybe anywhere here, you're going to get a bounce and you're going to have a little bit of retracement back to the mean. Meanwhile, this 20-month moving average, as time goes on, is going to continue to be negative sloping. And at some point, you're going to make a very, very big rally. Everybody's going to be like, hey, we're coming back. It's going to get rejected. Minimally, it needs to form a base. Not everything is like meta. Like meta, like everybody talks about, oh, it's the next meta where it's just V-shapes from here, like 2023. Most things form a big base. And I probably wouldn't trust this for a long-term investment strategy, unless if you're willing to really truly believe in the fundamentals, unless if you're willing to wait. Because I see like it might get rejected here and it might form another base over here. If this is one of those, things that fundamentals can turn around, you can probably still take time, and sometimes it can take a couple of years. That's kind of what I'm seeing. But if you want to trade, I can see people buying into it for like a counter rally. I can see that.
Yeah. Yeah, it's interesting, just especially given that drop. Not a name that retail really loves and holds. So one that retail's a little bit more into, but it's kind of on the lower side. And I do see a couple of people asking about, oops, not that one, Duolingo. So Duolingo, as you pull it up, I'll talk a little bit about like what led to this drop and everything. So Duolingo reported earnings. You look at the top line numbers and everything. It's like it looks really good, really solid as well. But their guidance was a little bit weaker, and their bookings related to the guidance, forward bookings, were a good bit weaker than anticipated. And so the thesis has been for a while with Duolingo, and you'll see kind of where it peaked, and that's where that thesis started hitting, was that AI would disrupt Duolingo. Somebody actually asked, would Duolingo be an AI name, AI robotics play, speak to you? I wouldn't see that necessarily, Heinze, but they are using AI, and that's one of the criticisms. Like the CEO actually came out with that we are AI first, like about 6 months ago or so, and there's a lot of pushback against that. People are like, you're putting people out of jobs, you're not using contractors as much, and it's producing AI slop. I've seen a little bit of that slop. Some people have shared some screenshots and sort of things. Now, at the same time, they also changed the way Duolingo worked, and so they introduced an energy system. So instead of you can play as long as you want for free until you make a certain number of mistakes in the day. They made it so that there's a limit on what you can play, and that energy slowly fills up. And of course, you're penalized still for making mistakes. I think the goal was to try to drive more people to the subscription model rather than the freemium model, at least here in the States. And that seems like maybe it perhaps backfired. Now, they also lost Zaria. I can't remember her last name, but she was a key marketer that had been there the whole time with Duolingo. It was basically over all the viral marketing that they'd done phenomenally well. And so for myself, I'm guessing, and I'm about like 80% confident in this, that the reason for the slowing of the bookings and everything is related more towards some pushback regarding AI first, that people not really loving the energy system and then not being quite as efficient as far as marketing spend as well. But more so than AI actually disrupting it, I still think that Duolingo is going to be a learning platform. They introduced chess, for instance, is one of those things where if you have a repeatable skill that you can learn online, Duolingo is probably going to be the platform in the future. I bought some just briefly. It was an invest game. Like, you know what? There's higher conviction names that I want to be in. So I exited. So I've just been on the sidelines, which I'm very thankful for, because if we look at the stock price, yeah, it's been kind of brutal. So what are you saying from the TI side?
It's a falling knife. It's hard for me to. I do think that a counter rally probably will happen, because if I use a Fibonacci level to look at, and again, like, you just have to use Fib level to try to get an idea in terms of what's happening. It's at the 0.5 log Fib, which basically like bounced right off of that, right? You thought about these things are algorithmically driven. They really are. Like, there's little doubt in my mind that institutions and market makers use these Fibonacci levels to figure out support levels and resistance levels. And it's basically bouncing right off of the 0.5. Now, is that a support level? Is that a good thing or bad thing, right? Well, this whole sell over here, imagine this rally going up here was on very little volume, right? So this whole rally up here from 2024, late 2024 to early 2025, really was not much of a conviction, really. And I think once there were some maybe because of earnings or whatever, is that people find out, hey, I may not want to be in this anymore. There's these big volume selling. There's a big rejection candle over here too, which is bearish. Now you're all the way down here. Now you're touching the 0.5. So what is the trend, right? Is it still higher highs and higher lows? You would say yes, it is. But if you actually look at the averages, you actually look at the 20-month moving average, is finally, like, it was on an uptrend here. But because of how brutalized it has been over the last 6 months, the 20-month moving average is actually not really sloping upwards anymore. It wasn't serving as support here anymore. It's now serving as a little bit more of a resistance, right? So I do get a little bit worried about getting into something like this, because even though you're at the 0.5 Fib level, sometimes these things just keep going lower. Like, they can go to a lower Bollinger Band. You don't know, like, it's the volume is still relatively high. You just don't know how low it's going to go. You do have a buy order block over here, right? I think there are some people that are interested in buying, so you are finding some support here at this level, but I just don't know. Like, if you can have a counter trend rally, again, I can see this thing potentially push all the way back up to like 280 or 300, and then see whether or not we have enough energy to push through. If it doesn't, it can make another lick lower. So I like for something like this, I generally would be a little bit more cautious of getting into, especially if there are other names out there that are that fits the whole AI theme better, that you think would be a disruptor. I don't know, man. Like, do you think Duolingo is a disruptor though?
I think it can be, but I wouldn't touch it here personally. Like, one of your viewers said, "I'm sorry, but amongst all the opportunities of someone's betting Duolingo this day and age, doesn't make sense to me." I will say the one thing is it's growing over 40% year over year. It continues to grow rapidly, and I think that their moat is a lot deeper than a lot of people think. The question is really like, can they pivot into a full learning platform? The chess kind of indicates that they can, but I think that they've made some missteps as far as execution along the way. So that's more of an execution thing than anything. So I don't know. If you look at it like as far as a PE standpoint, it's egregiously expensive. PEG, egregiously expensive. Non-GAAP PE, it actually looks really attractive. So it's one that I'm just kind of keeping an eye on. Maybe at some point I'll grab a swing there. I don't know that, even though I think that they're going to be fine, I just have a lot higher conviction in a lot of other names, and I'm very concentrated portfolio.
Yeah, I mean, I don't, and this is like a crap post that I made. I don't want people to think I actually believe in this. But somebody said that Duolingo is like the next Palantir. So I inverted the chart for Duolingo, and just to show you the trend does not fit. Actually, matter of fact, it's going the wrong way. So yeah. So not to say that Duolingo doesn't have potentially good fundamentals, but it is an expensive company. It just had a big giant downtrend, and I don't know how far down it's going to go. You can have a counter trend rally. I don't know whether or not it's going to be reshaping. Right? It could very well just get rejected and go down. So.
Yeah, I think it's a little early on that, but you brought up Palantir, so let's go there next. Palantir, is one of those that I know you love to talk about in chart. I love to talk about, and I'm glad that I was an early investor. If you were as well, had some pretty good gains from that. Palantir pickleball right behind me too. So, but Palantir posted like literally the greatest earnings that I've ever seen of any company that I've paid attention to at that time. Now you can go back to 2023 and be like, oh, NVIDIA was better, and I'm sure you'll find other names here and there. But like Palantir guided for 50% year-over-year growth, which is insane because they're talking about $1 billion quarter. And they're a business to business. It's not like business to consumer or something like that. And I was looking at a lot of different factors. I'm like, I think they're going to do 57% year over year. I think analysts had them at 51. They did 63. And by any means, like U.S. commercial is growing over 100%. Like the only place that's really not going well is international commercial, very specifically. Even international governments, of course, U.S. governments as well, ramping up. Net dollar retention actually exceeded where I was. I believe it was 134%, and I predicted 132%. And just almost everything is going right. Now you can really squint hard and try to find weaknesses from a fundamental aspect, but really the only real fundamental weakness for Palantir is the price of its stock. It's very expensive. It's growing ridiculously well. It has one of the deepest moats, and I think it's one of the highest quality businesses out there. I've thought that, frankly, since 2022, and the market disagreed with me then. Now the market is probably even more bullish on Palantir than I am. And so since valuation comes into play, you've created a verb, by the way, related to Palantir. So mention the verb and why it is, and then tell us what you're thinking as far as the chart.
Yeah, there. So the verb is palantiring. Excuse me, and you're probably thinking it's like absolutely nonsense. You're probably right, because there's only one Palantir, and the rest of the stuff is just the rest of the stuff. Like I cannot argue with that because I agree with you. But on the other hand, there are certain behaviors that I see that makes me feel that there are a lot of other stocks that are showing some very similar behavior as Palantir was before it broke out. I guess is my thinking here. And what I meant, and this really started coming about when Palantir was like in the 30s. And I saw a couple things. One thing that I saw like a parallel between Palantir and what Bitcoin did from 2015 to 2017. I saw that it was stuck between these two, fit levels here, and these are like what they call like the golden pocket. The detail doesn't really matter, but whenever you get stuck at like a very important area, it looks like reaccumulation before breakout. And if it breaks out above certain fit levels, that usually ends up having a lot of escape velocity for a stock to just keep pushing up a lot higher because they've accumulated and reaccumulated enough. This is all market psychology. This is, I'm not just drawing sticks and lines. I don't care about any of that. I'm trying to figure out what the market and what the stock is actually doing, what institutions and whales are doing behind the scene. This looks like reaccumulation. This looks like reaccumulation because it just keeps on pushing up higher and cooling down and higher and cooling down. That's what Alibaba is doing right now, by the way. But anyway, that's a different story for a different time. Once it starts to hit that escape velocity, when things push above certain fit levels, like these higher fit levels over here, and things start to get really impulsive with the Bollinger Band expansion, which basically just tells you things are getting explosive, right? You see signs of that. Things usually keep going up for a long time. The same thing happened in Bitcoin, and I'm seeing a very, very similar thing here. The truth is this, it's an extremely volatile stock. It can go up to 120, go down to 60, and next thing you know, it's like 200 and something, and now it's like 177. It doesn't go up in a straight line, neither does Bitcoin, right? I think that there are some pretty important fib levels. 1.618 log fib is very important. 2.272 is very important. 2 is also important. So it just broke the 1.618, so I think that it still have more room to go up there. And the Bollinger Band is still expanded to the downside too and to the upside. So the trend is your friend. The trend still wants to go up. And you can say that, okay, so how does it correlate into fundamentals? The way I think about it is this: as long as there is liquidity being poured into the system, as long as there is AI development, as long as there are companies that are trying to figure out how to make their flow to be more efficient, as long as there's a need for as long as there's an increased liquidity going in to support growth, not just in Palantir itself, but also the general tech sector and AI sector, Palantir probably had more juice to go up, because you're going to keep seeing the fundamental numbers keep on getting better and better and better, and there are going to be more and more doubters, and there are going to be more people shorting the stock. So to me, I think there's more juice to go up, unless you're talking about concerns for the economy, there's liquidity crunch. But we are just now, about to stop QT, right? Quantitative tightening. We're now just about to, potentially have some rotationary money coming in from China and Japan to other sectors, right? I feel like there's enough liquidity in the system that can support the growth of a company like Palantir. And matter of fact, I would actually start getting worried about Palantir stock price if the PE ratio starts to get compressed.
Yeah, I mean, in like compressed, I don't think you're saying in terms of like them executing at a ridiculously high level,
Exactly.
driving earnings, and that kind of compression is good. And we'll need to see it, like them growing at 63% year over year. Like, the question is how long they can do that. Bears are like, oh, it was a one-off, and most of us realize, like, the way that Palantir is structured as a business, no, but there are harder comps coming all the time just because they're growing the way they are. I have personally, so I in 2022, my position was 90% of my portfolio was in Palantir, and it was quite the ride. But I started taking gains, and I don't think it's wrong to take gains, and I don't regret most of it. Now, the one thing I did regret is I had some underwater covered calls that got away from me. Those are not ones I wanted to sell. So I'm like, okay, I have less Palantir than I'd like to, even though it's my fourth largest position. And so I've started the world's slowest DCA. If the price collapses unexpectedly, I will buy a lot more, but it's slow enough that if I had 3, I think maybe 4 years, I would not have doubled my position in that time. So that just kind of gives you an idea of, I'm being very careful and cautious with this current price, even though it's a ridiculous company. There's a price where I'm like a lot more cautious versus if it's trading at $100 a share, still looks really expensive. But you have to realize what they do, and that would be an opportunity in my mind.
Yeah, I mean,
but that's 50% low.
Yeah, it never hurts to take profits, and never hurts to diversify. Like, if you're like 90% Palantir, I think it's completely reasonable to sell. But what got you change your mind to get back in, though? Like, I think what made you felt that you wanted to get back in?
Yeah, it was the prior earnings call, Q2, that they demonstrated. At the time, I said it was the most ridiculous earnings of any company I'd ever followed. They've since surpassed that with their Q3 earnings, and so seeing just the rampant demand, contract after contract. You see major companies like Luminar come in and say, "Hey, we want to pivot our entire business. We're going to use Palantir to do it." Now, that's a paraphrase. It's not an exact quote. They're doing some other things as well. You're seeing rampant U.S. government adoption. You're seeing international really accelerate, at least on the government side, especially in the UK. And we're at the point now, like in the AI wave, where there's some fatigue, but the fatigue is related to ROI really not being there. So like Salesforce or CRM is one of those where I think Karp has almost called Benioff out a number of times of just being great salespeople, which they absolutely are. Benioff is one of like the all-time greats for a salesman. But a lot of AI companies, including them and C3 AI, well, I guess CRM's more than AI. That's what they do: is they sell a product, they talk it up, and then you actually use it, and you're really underwhelmed. The opposite has continuously happened with Palantir, and so you have all these different like success stories that are so a couple of things happen. One is 2022, Palantir had collapsed as far as price, is growing at one point only 13% year-over-year growth, and nobody wanted to be associated with Palantir. Like a few companies publicly let people know, like, hey, we're partnered with Palantir. It was rare. Now it's the opposite environment where almost every public company, now there's some exceptions, are eager to say that they partner with Palantir. Part of it too is if you mention Palantir, it's kind of like AI in 2023, the market understands Palantir drives ROI. Like they absolutely do time and time again. Will there be times when they don't? Yeah, there will, like with any company, but it's very, very common. And so when Palantir is mentioned in an earnings call or partnership, the price of whatever it is just immediately spikes. Same factor with NVIDIA, by the way, although to a lesser extent these days. And so with that going on, you have a lot of publicly traded companies that are using Palantir, which are like, hey, we're just using it for this one little area. And then like the next quarter, like, actually, we were so impressed, we're using it for this. And then going to the point where they're like, hey, we're building everything on Palantir. And you have competition, which is not using Palantir, looking at these companies that are public, that are growing and saying all these good things, and they're like, man, they have no choice. And so you are seeing that at least in the U.S. commercial side. International is a little different story. We can talk about that if we need to, but yeah, that plus the immense acceleration, you could see net dollar retention really being spiking up, and a lot of that was not fully captured in net dollar retention because a company has to be a Palantir partner for more than a year. So yeah, it's basically the dissatisfaction with other AI companies. Now there are some legit AI products and companies, but they're not as they're not Palantir in terms of quality. Palantir is pricey though, so it wasn't everybody's first stop. But yeah, it's fatigue with competition. It's Palantir demonstrating ROI again and again. Companies willing identify, and then they mention the massive ROI, which gets a lot of people's attention. And there's like literally no sector where a business could not benefit or a sector could not benefit from Palantir being involved. So that shift, I'm like, okay, I need to get a little bit more of this slowly. Maybe the market will give me a stupid price at some point, but I'm not going to wait for that. I'm just going to start DCA.
Yeah, I don't think people really understand it, because if they're stuck in like, and again, Warren Buffett was an extremely brilliant investor, but like, you know, when you this world, and I hate to say this time is different, this world's different, but like this world really is different compared to before. I don't think people even imagine having $1 trillion companies just like 20 years ago. It was just, you just get laughed at, right? Now you have like several. Now Palantir, if it doubles in price, is going to be $1 trillion company. I think a lot of people just cannot like picture, cannot imagine these kinds of like crazy things. You know, if you're talking about Palantir going like stopping, I don't know when it's going to stop in terms of stock price. I do think that is going to be very economic sensitive, and I do think that once other companies, if they cannot afford growth anymore, if they cannot afford experiment with Palantir anymore, and if they have to cut certain services. And Palantir is so sticky, I don't think they would like get rid of Palantir. They're going to keep using it, but it's more like the growth rate. If it goes from like 40% to 35%, the stock's going to tank. Like it's not like I think as long as the growth rate can sustain, as long as there's enough liquidity going into the system, I can't really call a top on this. And based on what I was also kind of laying on, like the global liquidity situation on Bitcoin, on Ethereum, there's enough liquidity to keep on going in the system to support growth, as far as I can see. Small caps haven't even run yet, right? So you're talking about a lot of these small cap companies, if they end up benefiting, like let's Russell 2000, if they end up going a lot higher, you might end up having a lot more liquidity going into these, high debt companies, and they might have these, they might also have funding to try and experiment with Palantir, products, and that you talk about potential expansion of Palantir growth, basically, because right now only companies that can afford Palantir use Palantir. but they, and also the question I had to you too, Roy, like, do you think they're scalable in terms of, their products? Like, do you think that they're able to
Yeah, that was a big question mark in 2022. And the answer is we really didn't know. What happened actually in 2022, even before the ChatGPT wave, was they began to look at, they're like, okay, we have a very thick product, but we need more modularity. And so they began to design that. Now, that was really good timing because, of course, ChatGPT moment came out. Palantir, everybody's racing towards LLMs. Alex Karp's like, hey, this is a commodity. We're not going that direction. Instead, we're building the ontology, AI platform, AIP specifically, doing boot camps. And these two things cured the two weaknesses that Palantir had. One was the sell cycle. Boot camp solved that. And the other was basically trying to make a thinner, more modular product that would help them as they move down the market. You've seen that they release every single time, the number of deals that they strike. Usually it's multiple deals per company, not always the case. Smaller companies, maybe not. But they mentioned the sizing too, like $1 million deals, $5 million deals, $10 million deals. And we've seen them move down market into smaller companies. Some of those even highlight themselves on AIP. And these are not like massive companies, massive contracts. Some of them are. But that's been one of those important aspects is like, can they actually move down market, especially since back in 2022, mostly they use forward deployed engineers. Now, the other thing that they've done recently is they've used their entire system basically to build, I can't remember that they call it something slightly different, but it's basically a forward deployed engineer that's integrated within the actual tech stack using their AI technology, not replacing like the geniuses that are FDEs out there, but it does help multiply these guys. And so you get something like a forward deployed engineer through Palantir. What's funny is like you've seen a lot of companies, naysayers, make fun of Palantir and say that they're trash and everything. Now shift and like literally do things called boot camps. Yeah. And literally like forward deployed engineer has become one of the hottest job terms that are out there. These were coined by Palantir. People see what you're doing. They want to copy. The problem is if you copy it without the culture and without the tech stack, it's a knockoff imitation. It's not the same thing. So, yeah.
Yeah, and they also have already developed it. They have like a 10-year head start compared to everybody else. So,
yeah. Well, let's do some more rapid fire names.
Okay.
Since and so like one that I've seen a few questions on was SoFi. So SoFi, real quick, as you pull up the chart. Fundamental aspect, like second amazing earnings in a row, a little bit harder comps this time, but that was perfectly fine. Loan platform business is accelerating just ridiculously rapidly. And the nice thing is there's so many tailwinds with regulation as it relates to banks, crypto, also rate cuts as well, fueling a lot what happens with SoFi. Now, the thing is with Fintech and also SoFi, which is more than a bank, it's more really a Fintech. If there is consumer weakness in a recession, we know the stock won't perform well. We don't know how the company will necessarily perform. But yeah, I'm very bullish SoFi, especially over the next 2 years. They have immense tailwinds and a lot of catalysts on the horizon. Some asked, and so I'm going to be very specific on this. Basically, what are the chances you'd rate it to of closing above 35 this year? For me, long-term investor, it doesn't matter too much. I would say even without S&P 500 inclusion, as long as the macro it stabilizes here and the shutdowns are resolved, I think we could see it at 35 or higher. I'd say, I'd say it's a weighted coin flip. So maybe a 51% chance that we close out higher than 35. Next year, I think they'll hit the 35 tranches in terms of the PSUs for the management, maybe not 45s because it's a weighted average over 90 days.
Yeah, I mean, if I look at SoFi, I also have position. This is like my number 4, number 5 position in my portfolio. I believe in the fundamentals. I don't really talk about it too much, but I do believe they have a bunch of growth and a lot of catalysts that are involved. The reality is this: I think that the entire time it was going down, I think a lot of institutions were buying. Like I don't know how they do it, but they just show that time and time over and over again. The earnings were getting great over and over again down here, but it was still being suppressed. And you can only keep the ball down for so long. I think it just kept on happening here. I think the macro was scary because of tariff scare or whatever. But basically what it did is just basically backtest these key fit levels. Like it basically was like a deleveraging event before it goes up higher. The company's growth is fine. And the chart is showing higher highs and higher lows, which is fine. It's also starting to hit the escape velocity because if you're also looking at like the Bollinger Band, it's starting to kind of contract a little bit because it started the month and there's a lot of volatility here. But overall, it's been expanding to the upside and the downside. This is a very impulsive stock that wants to keep going higher over time. It's making all-time highs here. It just needs to convincingly break above this previous high to hit some of these higher levels above, kind of like Palantir did. I'm not saying that this is the same stock as as Palantir. I do see that it's hitting escape velocity, and I think the valuation, it might be getting one of those points that if the bull market continues, if we're entering euphoria, the valuation may not matter that much as long as the growth trajectory is looking great. And I think SoFi, both on the technical side and from the fundamental side, looks good. So.
Yeah. Okay, great. So related to this, also in fintech, I want to ask about PayPal. I think the ticker symbol is Pain. Okay, maybe. But it could be. On the fundamental side, I've said a number of times, and there's a lot of factors that go into this, that Q4 earnings report, which will be in actually it's early February technically, for PayPal, it will probably be the inflection point. It's just a guess, but it's based on a lot of fundamental things lining up. So specifically, Q3, I hadn't expected much. I figured it'd be a triple beat, but the market wouldn't care, which has been like kind of the history of PayPal. It spiked a bit more on the OpenAI partnership, which I think was inevitable and expected. Although like really good and really important. I've not done a video on that yet. Really good bottom line numbers, but what's lacking is top line number. Top line revenue growth has begun to reaccelerate, but it's not super exciting yet. And then PayPal branded itself is stuck at 5%. I think both those things do improve in Q4. There's a lot of initiatives that are doing that. And all the way through next year, of course, there's major things that are ramping like advertising, which is a very high margin product. PayPal World as well, which Venmo goes worldwide. That's very exciting, very compelling. There's a lot of other stuff too, which I'm not going to go deep in the weeds on. But that's where I'm guessing that we see the inflection point. Now, does that mean that we're going to double at Q4? No, absolutely not. But we might see a nice spike. And I think that as analysts and other people understand, like PayPal has revitalized their tech stack. They've revitalized their brand. Everything is cohesive and interconnected instead of very siloed. And it's a very clear plan to pivot from just payments to more of a commerce platform, which is especially there for the small and mid-sized businesses, especially like the advertising thing. It's really interesting. I think that'll be a lot better understood when they do the full year guidance as well. So what are you seeing on the chart?
I'm seeing pain. No, actually, it's been a very tough year for PayPal because it really, since that February drop, it really hasn't done anything. It's been trying to break above, and you can see this fit level here pretty clearly. It's been trying to break above the 0.236 multiple times, right? Had a little bit of false breakout, but actually ended up just breaking down again, getting rejected. With that said, it's building up a very strong base. With that said, we talk about the complacency thing at the beginning, right? Like how people think that PayPal is not going to do anything. Well, that might be true. And that might be true for another quarter or 2 or 3. We don't know how long this consolidation is going to last. Like same thing with XYZ. I don't know how long the consolidation is going to last. There's no way for anybody to really tell. All I can say is that there are buyers, and you know that there are buyers because you have these wicks down here. So somebody's accumulating on the other side, but there is no, like, maybe they're waiting for earnings numbers, they're waiting for some, something impactful to happen based on the numbers. But currently the trend is changing from a negative slope over here. The 20-month moving average is so negatively sloped, it's just ridiculous. It was trying to break above over here, couldn't, because it was still negatively sloping. Found some vulnerable area here to break above, and it did that, but it just wasn't able to hold the gains, and it dropped back down below. It's just consolidating, hugging the 20-month moving average, and it's just waiting for something. I think it needs to push back and be a little bit more impulsive before this thing really takes off. Now, with that said, usually when you have this, these are standard deviations, right? Again, Bollinger Band, that's what they are. When you have such a huge volatility, the Bollinger Band expands, and when the stock hasn't done anything for 20 months, the Bollinger Band contracts, and things can't contract forever. They are going to be pretty volatile at some point. I don't know when that's going to be, maybe 2026, maybe 2027, but I see PayPal moving up. From here, it was able to reclaim this 40-month moving average from support. I do think that PayPal has legs to run, although I don't know whether or not, like, when it's going to hit the previous all-time high. That I really don't know. But it's looking like it's squeezing, and it's squeezing harder and harder. That means that a more explosive move is going to happen. When and how fast and how long, I do not know.
All right. Well, thank you so much for that. Okay, so a couple of more that we'll do kind of rapid fire as well. So this is one, like, energy plays, two energy plays back to back. This one, ENPH, and then EOSE, which I know very, very little about. ENPH is more of a consumer side. They did launch commercial products as well. Of course, solar is very cyclical, and it's very much in the down cycle right now. ENPH has gotten crushed. It's a good quality company. This will be, I think, the third bear cycle that they've survived through. My guess is that maybe midterm elections is where things start changing for solar. Interest rates falling also helps. There's this massive demand for energy. And I think that right now the Trump administration is favoring certain forms of energy, which is fine. But we're at the point, or we will be relatively soon, a lot of it's because of AI demand and data centers, where we just need energy, period. And the quickest ramp is solar, but LNG is probably where I'm looking at more. So I actually bought some VG, and I'm doing an invest and investigate. ENPH, I think, will be fine. It just, I have a hard time figuring out when it will be fine from a fundamental standpoint. And there are just so many headwinds against it, especially with the current administration. So what are you seeing on the chart?
I'm seeing that I think a lot of people already knew that ENPH is kind of hitting a top, and that, it was somewhat worrisome from 2021 to 2022, because you can see that the top up here, they look a little bit exhausted, and you can look at momentum indicators. Again, not anything fancy, it's just RSI. A lot of people use this, so we can see how strong the momentum of the stock is. If the stock makes a high here, a higher high here, but if the momentum is not there anymore, then it can potentially plummet, which is what's happening with ENPH right now. The question is, how low does it go? And the answer is, I don't know. I took a stab at it when it was like around the 50s, and as soon as I saw it breaking down, I was like, no, I got out. So I think I lost maybe like 15% or something like that. I was just like, no, this thing is going to keep going down a lot lower. And sure enough, it went down to the 30s. And when it got down to the 30s, we're like, okay, so where's the support going to be, right? Well, 0.618, that's where it is right now, right? That's going to be a buy. Is that where I should load it all in? No, because it's falling knife. You don't know how far it's going to go. You want to see some kind of base forming behavior before you can feel more confident about it, right? Matter of fact, it closed last month below that level, below the 0.618, and we are currently still underneath of that. So the bias is going to be more downside potentially. But I just don't know if I'm able to buy this falling knife. Again, I do see some deceleration here in terms of downtrend, but I cannot confirm that the bottom is in. There could be some counter trend rallies here and there. You're going to see ENPH going up like 15, 20% in a day, but it does not make a trend change, right? So I don't know if I would advise that. Like, it could go all the way up to 70 and get rejected there and go down a lot lower. That's the reality of, like, the trend is your friend, the trend is your enemy. Like, I don't know if I trust this here. I see traders probably want to go in for like a counter trend rally like it did over here, but I just don't know if I want to get into this name at this point.
Yeah. Oh, that's helpful. And then the other one is EOSE. So EOS Energy Enterprises. I see this one quite a bit. I don't know anything about it other than just energy is a good place to be with a long term. While you're pulling that up and getting that set, thank you for becoming a member, Epic Hamster. Appreciate you. Be sure to check out the after hours. I think we'll be posting that from the Fintech Friday tomorrow, I believe. So enjoy that episode. We talk usually a lot about non-fintech names. So that's like AI, energy, and that sort of thing. Also, if you're interested in energy, I think it was 3 after-hour specials ago. That's where we talked a lot about energy, different sectors, and some names in it too, including VG, which is my most recent holding, which I'm still investigating.
Yeah, I think Roy's got to go soon, so I'm just going to go through it very quickly here. This is USC, a monthly chart here. If you just don't look at anything, it's formed a very nice base over here. This is like a double bottom. It's a higher time frame double bottom. This is a huge accumulation zone over here. Broke through that, back tested that area, holding. This thing is going up, right? There's no question to me. And here you can see like it was rejected here 0.618 here for a very long time at $7. And I also must mention, if I pull out the Ichimoku cloud here, if it breaks through that line over there, the Ichimoku line over there, then it's going a lot higher. It's going to double. It did more than that. It pushed through my target of 0.618, and it's basically back testing it right now. So I think this thing has a lot of juice left. I think it's going to hit next resistance level is going to be like 20.35, and I think that's going to be a pretty strong resistance level there. But it's not overextended because it's still touching the Bollinger Band. It's still within limits of the standard deviation. So it has more room to go up. I mean, I like higher targets, but one level at a time, right? It has to break above the all-time high. Before that, it has to break above 20.35. Apparently, I was reading posts. Apparently, fundamentals is really great. So it could keep pushing up. I don't know when it's going to end. I don't know where the cycle is going to end, but it does have a lot of escape velocity on the way up here, because it's not just the upper Bollinger Band that's impulsively exploding to the upside. If I just pull out the lower Bollinger Band, it's also very much exploding to the downside. So the standard deviation and the trend tells you that there's more room to go up. I just get a little bit more worried here around 20.35 on the short term. So.
Right. No, that's helpful. All right. So I'm seeing a lot of Rocket Lab too, and also Grab. So let's do Grab first. And this is one where I think Amit popularized it, and he's called some great plays too. This is one where I disagree with him. I think it's a good company. I prefer to invest in great companies. They don't have debt. They're positioned well. They have a pretty deep moat. But it's an area where I don't fully understand, especially since a lot of the growth is coming from the lending side. We don't know how successful. It's too early to know really until we get to a period of consumer weakness in Southeast Asia specifically, how they'll fare over time. I do have one prediction two. I think Grab will do decently over time. I don't think it's going to be like a amazing, ridiculous outperformance relative to the stock market. And the other is they have a pretty good sized wallet. So I think there will be an announcement next year, a partnership between Grab and PayPal as they join PayPal World.
Interesting. Yeah, no, I actually held Grab here for a couple of months. I actually was, I was holding Grab here, and as soon as I see the target's probably going to be going from like $5 to 6.3, I just I exited because I wanted to. I don't know. I don't remember what I was doing. Maybe I was buying like Fiserv or some other stock at that time. But I saw the potential for it to go like 20-30%, hit a resistance level here at 0.5, as well as the monthly Ichimoku cloud get rejected there. That's kind of exactly what it did. It probably ended up consolidating over here, probably ended up breaking inside the cloud. I see it hitting the 0.618 next, if it is able to break through. And you're talking about this pretty hefty 20%, 30%, 40% gain from where it is at right now. But it's not going to come without a price. It's probably going to end up waiting for a little bit longer before it's able to get to those levels. But I don't see it having those escape velocity SoFi or Palantir, those kinds of charts that I was showing, including EOS that I just showed you. It just doesn't have that. I might change my mind if it hits some of the higher levels. If things really get going, then yes. But I think this is going to be like the slow stepwise, one step at a time kind of thing. That's what I'm seeing on my chart.
Okay, great. Rocket Lab then next. While you pull it up, Rocket Lab, I'm not in. I classically missed this one because I wasn't doing the invest and investigate thing. I started looking into it deeply when it was 4.5. Went up to like 7.5. Figured I'd get it at a pullback, and that never came because I was a dummy. But I saw the thesis. It made sense to me at the time. It seems pretty expensive relative to where they're at in terms of revenue, and sometimes the stock market get ahead of themselves. Bit of a reversal at the top there, as you can see, which we'll talk about in a moment. Now, there are some catalysts still for Rocket Lab, even though you look at where they're at. Part of it's Neutron rocket and that rollout and acceleration, but also there's been some brand damage as it relates to anything that Elon Musk touches. And so we'll have to see if Rocket Lab is given a few more contracts where SpaceX might normally win that. They're not a one-for-one competition, but they're about as close as you come. And then the last thing is, if Golden Dome is a real thing in the United States, we'll have to see whether or not that is or not. I won't get into whether it should be or not. You'll see a lot of winners, including Rocket Lab and probably Palantir too. And so that could be a major catalyst as well.
Yeah, I think the percentage-wise majority of gains probably already been made, to be completely honest, from like, $3, or you got to see enough to buy at $3, or you're like accumulating throughout the entire time over here, then good for you. You've basically captured the majority of the gain from like $3 all the way to 34, right? It's going to make a higher high because it's got enough momentum to do it. But right now, the RSI is kind of trending down. You are going up on bearish divergence. I do think that you probably have another leg up, but it is getting rejected at some very important resistance level here, which is the 1.618 log fib. Kind of like how over here, like initially, I guess this is more like the 1.236. I think that's where it got rejected at. Yeah, it got rejected at 1.236 and it came back to 0.86, bounced off of it, and then sure enough, it pushed to the 1.618, which is a very, very important fit level. It's having a hard time pushing through, so it's coming back and back testing some things here, which include getting closer to 1.414, which include getting close to like the some of the Ichimoku levels over here. This is the conversion line or Tenkan. So I think it's probably going to get range bound here, probably going to consolidate here, probably get another like up, but it's probably going to go on bearish divergence. So it at some point, I think it's going to lose some of the momentum, right? Like even if you go up to 130 or 215, you're talking about maybe like 2x, 4x potentially, which is a lot of gain, but the majority of the gain from $3 has already been made. I guess is perspective here. So
yeah.
If you're interested in other like early companies that other people haven't really discovered, I think that it depends on your if this is the amount of gain that you can, if you're patient enough to wait through the consolidation, then I think it could still be a good play. But I think a lot of people who bought down here are trying to sell it to you. That's that's what I'm trying to say. So.
Do you have time for a few more? I know I said an hour and a half.
I have time, man. I don't know about you. I have time.
Yeah. Let's go for another 20 or so minutes, because I see a lot of names out there. If there's one, by the way, that we've not talked about, if I see it a few times, I'll try to throw it at the cat. But one, since you mentioned, a smaller cap opportunity, it's my newest like permanent holding, not VG, but it's AEHR, Aehr Test Systems. They've been around a long time, so I think you'll like the chart just because there's a lot of information there. In essence, what they do is they provide burn-in testing as it relates to the chipset production. So they do more than that, but that's mostly what they do. Of course, as chipsets are more expensive, as the tolerance for failure becomes less and less, all businesses that are involved in this will do some form of testing. Usually it's very late in the production line, which means it's pretty inefficient. You're throwing away and junking a lot more. And also it's a higher cost as far as energy. Aehr Test Systems is literally the only one that provides gallium nitride testing at the wafer level. That's a whole sheet before it's cut in individual dies. They've been around a long time. They're right at the edge of profitability. They've been profitable in the past. They made a major pivot back a couple of years ago to silicon carbide, which are mostly applications related to renewables. It's not the only one, but where renewables is at right now, it's not too good. So there's been some major headwinds with that, even as basically their AI product line, which is just, again, testing these sort of things, which are highly complicated. They've carved out a little moat and a little niche that major companies like Teradyne don't really want to mess with. And so I think that there's massive potential for them. And there's really not that much risk relative to, like, if you look at the underlying where the company is at, and also in terms of expectations, even though we've seen, pretty nice price accumulation since a little bit before I got in. I think my average is like 13 or 14 or so. So what are you seeing on the chart, Kat?
Yeah, I just want to I haven't really looked at this for like a long time. I think before I was, getting chart requests, I was looking at like a year ago. This is kind of how the FIB levels work right now. If you just use this recent high and low right there, you can see how it basically got rejected here, 0.786, and its finding support at 0.618. It's stuck in a range. Again, I was mentioning it was between these two levels. Usually it's more like a reaccumulation zone. So I think it's cooling down right now. If you also look at the Ichimoku cloud over here, or I can pull it up here real quick. It's basically, falling down underneath the Ichimoku, is trying to push back up above, but it's having a hard time doing so for the first time. You can actually just kind of look in detail in terms of like how the rejection Ichimoku works. It's beautiful, right? Rejection, 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 rejection. So it's consolidating right now. I don't really have much else to add to that, although I do think that it doesn't look bad. If you also move the Fibonacci levels around, let's say if you move it to like here, you can see how it's like between the 0.786 and the 0.86 that's consolidating, right? I mean, if you move from, different areas, you move from here, you can see how it's also finding support between 0.618 and 0.786. Like all these things are basically telling you that algorithmically, it seems to be stuck in a range right now. So you probably have time. Like, I don't think it's going to break away, especially since it's just moved straight up for like 6 months in a row. It probably need to cool down at some point, and this is probably going to go sideways, maybe a little bit down to scare you, but that's kind of what I'm seeing here. So,
sure. All right. No, that's really helpful. Yeah, I think this is one, by the way, if you guys aren't familiar with it, they have a longer sell cycle too. And so usually there'll be a press release when they have a major sell because it's a business company. And that's what really is a catalyst and the driver. I think that we'll see that probably within 2 quarters, quite a bit of acceleration in terms of revenue at earnings, might be 3 quarters from now. So it may be dead money right now. So I'm seeing this Quantum, I think, is something, and you can take either of those names, Qubits or Riggetti or another one. But I think those are the 2 best known. For myself, for Quantum, I think it's probably like Rocket Lab, where a lot of the price accumulation over the near term is kind of over and done with. They're very pre-revenue. I'm not sure exactly what Quantum solves. I know what they say that they'll solve. And I'm not also sure if it's real. For me, like if I was betting on Quantum, I would just buy Google. But yeah, I could be completely wrong here. This is not an area where I'm an expert. And that's kind of why I'm content to just stay on the sidelines as it relates to Quantum. To this date, like when it was, rising and accumulating much, much earlier, I was thinking maybe that momentum would halt a little bit earlier, and it has not been the case. So I've been wrong.
Yeah, I mean, I think you're absolutely right. Like, based on the fundamental side, based on like the P ratio, like there's no P ratio. It's there's nothing. It's all more or less pure, speculation on a technology that is, many years away. In reality, is this maybe we are in a speculative environment because Russell 2000 hasn't really made all-time highs. Right, and if you're able to have that increase in liquidity pouring in the system, things like Quantum, even though is really significantly speculative, can still do well. You look at like RGTI, I think QBTS have very similar charts here. Basically, they are at a higher FIB level. They're also holding support from like Ichimoku. It actually doesn't look bad from a technical standpoint. It looks like it wants to just consolidate sideways over here between the 1.27 to 1.4 and 4. And these are usually reaccumulation zone before the next look up higher. But again, just like Rocket Lab, I think majority of the gain has already been made. So I don't know, whether or not we're going to go that much higher to the cycle. Like I think you look at some of the crazy targets, I just don't know if it's going to do that anymore, because a lot of gains have been made, and I think people are probably going to want to sell it to you. But the reality is it probably has another leg up if we continue to have good liquidity conditions once it's done consolidating. Those are kind of my thoughts.
All right. No, that's helpful. It lines up with what I'm seeing on the fundamental side too. We're maybe ahead of things. So all right. So you have a super chat. So I think you're required to chart this one.
You have
so DOGE.
No. Let me see.
What is your percent chance? 1.414, $2.20 in 2026.
Let me see what you're referring to. I guess you're referring to from this high over here to the cycle low over here, which the FIB levels are a little bit off here. Let me see what you're referring to. Maybe you're referring to linear. Anyway, no, this is what, yeah. Okay, so this is from the previous high. This is what you're referring to, like 2.3, somewhere around there, depending on exchange. 2026, it's if you want me to put a percentage, I don't think I can, because I've been known to be too early on a lot of things. I mean, I've been suffering through SoFi, and so have many, even from the fundamental side. I've suffered through Tesla, which has, it's been a wild ride over the last 2 or 3 years, and is finally doing something. So as far as I'm concerned, like, I was also really early in Doge. I think that it's got some momentum, going for it, because I start seeing some wicks over here, but it needs to still get over, like, some of the very important foot level. Like, it couldn't even push for the 0.618 here after trying for half a year, right? And it had to really come back down to the 0.382, even a little bit lower, to even get enough energy to get back to where it is at right now. Overall, though, I do think that this is a high low type situation. I do think that some of the higher levels are going to hit at some point. Whether or not it's going to hit the 1.4 here in 2026 depends on liquidity conditions. This is, to me, meme coins are purely a liquidity play, right? We're not talking about fundamentals. We're not talking about anything. The very fact that Dogecoin is able to hold, and it's just amazing. The fact that Dogecoin is able to hold 26.68 billion market cap is something amazing to behold, right? And this is also a cup and handle type formation. So I think Doge is going to go up higher. I think it's probably going to push it to all-time high this cycle, especially since we are talking about, maybe having Russell 2000 breakout. But, whether or not it happened in 2026, whether or not it's 1.272 or 1.414 in 2026, I don't know. Like, I want to put a percentage. I say it's like 50-50. But I like to let things play out. I don't like to buy options, because that constrains you with, like, the element of time. And I do think that there is increased liquidity coming. So I'm just going to take a step back and saying, I don't know, but if you want me to take a guess, 2026, 1.414 over $2, 50-50. I'm gonna say that.
All right. No, that sounds good. Yeah, I've swung Dogecoin before. I think I've probably lost money overall. This is a good comment here. Roy, isn't Riggetti still making a loss? It has more downside than up. That's all quantum right now. They don't have a product that's out there for sale. They have partnerships. I don't know if quantum is real. That's why if I was going to bet in quantum, I would just pick Google. And I'm bullish everything Google except for search, and search isn't as bad as I expected. Really good earnings, by the way, on that. One that I'm seeing a lot of people ask about, and I did a poll. I put 4 names there, and I asked which would you guys like to hear about most, and that's HIMS. So if you can pull up HIMS, I'm a HIMS investor. I've reduced my position intentionally back 2 quarters ago. I just saw a slowdown likely, and that's turned out to be the case. A part of that is macro right now, so it's flirting right around $40. Core revenue has slowed. Part of that is they had to shift attention to offboarding some GLP-1 folks due to the shortage ending near the end of Q2. Marketing spend was perhaps a little bit more inefficient because some of it was geared towards weight loss. There are a lot more than weight loss. There are a lot of catalysts next year, more so than like for the next 2 quarters or so. So I'm looking at this more of a next year growth story. I do have some concerns as it relates to leadership, strategy, and also core revenue. Not like red flags or anything, but it just things that I'm keeping an eye on. And I do need to do a earnings review at some point. But yeah, I'm still bullish. Just if I mentioned this too elsewhere. VG is maybe the exception because it's so new. I might trim that and add to something else if the market keeps dumping and I'm like, hey, I've always wanted to add more to this name or buy. But HIMS is probably the next one on the chopping block there, which that's again only if I see a glaring opportunity that I need money for. So
yeah, I mean, I think the technical basically supports what you're saying as well. I think there's a significant slowdown this year. You can tell that with stock price. Like, there's no question it has done nothing really for the entire year. 2025 has just been going sideways. The initial move that went from like $2 or $3 all the way up to 74 has really been a lot of gains that have already been made. So the initial impulsive move to the upside that had led to the bullish band expansion is no longer there. You can see that there's a bullish band contraction here, right? both to the upside and the downside. It's just not as volatile as it used to be. It needs to come back and test some support to see whether or not you're able to get some pretty decent support. And that is also to see whether or not the holders currently are believing that there's going to be future growth reacceleration, right? That's basically the question right now. I think that this, and I'm not comparing HIMS to NVIDIA because I think they're the same company, they're doing the same thing. I do not, right? I just wanted to let you know, like, the micropsychology is such that when the stock has gone up so much, that it's been so explosive, it doesn't even matter if the numbers continue to look great. There's going to be some doubts. There are going to be people taking profits, and the stock can go sideways here for about a year and doing nothing. And it's eventually going to test a very important support level here, which is in this particular case for NVIDIA is the 20-month moving average. It found support there, so you have another move up, right? I think HIMS needs to go for that challenge to see whether or not it can find that test. NVIDIA failed that twice. It failed to hold here in 2022. It also failed to hold, here in 2018. And it just kept going down, right? This time it found support. So it really depends on the macro. It really depends on what this company, is, whether or not they are able to execute to the point of having reacceleration, and whether or not government regulations and whether or not, just the whole like industry in general is allowing it to do that. I don't know. I still think it's relatively like a market leader when it comes to, virtual care, but I just don't know it has enough. It has to prove itself, I guess is what I'm trying to say.
Yeah, and I think that's the thing, is the market got caught up in HIMS as a weight loss name, and most of us bulls were saying at the time, it's much more than a weight loss story. That is part of the equation for sure, but it's basically this whole ecosystem that they're building out. They've recently launched testosterone. Some of the products don't launch until early next year, and also menopause and perimenopause type of products as well. Hers is growing rapidly. There's a lot of things going well, but the year-over-year comps are tough really through Q2 next year. And it's going to take some time. They're undergoing some churn right now and transition as far as some core leadership too. So it's a hold for me. It's not I'm loading up at these levels at all, but yeah. All right. Since Rusty, you were kind enough to donate for us, let's do Coreweave as well. We might have time for one more after this. Coreweave is not one that I own, but it, like Nebius, I've seen as a quality name. I traded Nebius for, I invested, then I investigated. I'm like, hey, I just rather own more NVIDIA, even though Nebius has dramatically outperformed NVIDIA. I get those wrong sometimes, but I'm very comfortable holding NVIDIA. Coreweave has had a lot behind it, but there's been a pullback. So is there an opportunity, at least in terms of the chart? Fundamentally, I can't talk too much about Coreweave. I don't know it well enough.
Yeah, technically, I also cannot tell you too much about it because it hasn't been around long enough. If you like trend lines, it's basically hitting a trend line like that perfectly. So if you want to buy a falling knife right at the trend line support, there you have it, right? That's a daily chart. If you look at a weekly chart here, it's tough to swallow with this big giant candle on the way down. It's just very, very tough to swallow. With that said, I think there's demand there. There's this guy named Lux Algo who comes up with this thing called order block detector. I guess it's trying to detect like buy order blocks, which is being shown in green here. So I think there is some demand down here at this zone. How low does it get? Does it get to the 80s, 70s? I don't think anybody really can kind of tell you that.
All right, great. And Kat, I've got some more I can throw up too, but are there any like you're curious about from a fundamental aspect that I can just share my opinion on?
I think we've hit most of it. Like the only thing I always wanted your opinion on, like what Tesla is doing. That's always something that we haven't really talked about, but I think that's a pretty long talk too. So, but yeah, like this is, I don't know, Coreweave. I don't know. It's tough for me to say for sure.
Yeah, let's end on Tesla then. I think that's a good one. So Tesla just had their shareholder meeting, and of course the biggest piece of that was that the pay package was a yes for Elon Musk. So that was, I don't think it should have been a surprise for anybody, but it's one of those things that some investors were very focused on and concerned about. Now, there's going to be a lot of criticism towards Elon Musk because they just read the headline and they're too dumb to know what it actually takes to get this. So if he gets the $1 trillion amount, it's because Tesla has just flat out executed in terms of the stock and in terms of fundamental acceleration of the business as well. Is it a perfect payment package or payout package? I don't know. But The problem I have with Tesla is I feel like that a lot of the growth levers that they have are exhausted near term, and there's a lot of challenges, especially over the next year. Of course, robo taxis, full self driving as well, are maybe the next big growth curve. But they're also hitting a lot of lapping where they have the benefit, at least in the United States, of the EV tax credit. So Q4 is going to be absolutely dismal compared to where they're used to. Now, I think that that's expected, but if you look in terms of the share price, like, is it really expected? I don't know. Q3 was great, but we knew it would be because the demand lever was thrown forward since the EV tax credits expired September 30th. I think some of the brand damage stuff was some of it's real, but a lot of it was overstated. We could see that because of the demand in the used Tesla market as well. And then Optimus. Optimus is interesting. It's really why I'm still in Tesla at these ranges. Because I think it is more than a car company. Of course, energy is doing well, services is doing very well as well. But Optimus is really that huge opportunity. And there's a lot of, the problem is, like, if you are wanting to invest in humanoid robots, okay, it's not like super close yet. First vectors are going to be probably in the commercial aspect or business. You are seeing some private companies talking about shipping some stuff out to early adopters at very high price points next year on a small scale. The biggest question in my mind is not if these will be things, because I think that they will, and I think Tesla will be involved, but who else can actually scale like this? And really, that's Tesla has proven out that they can and they absolutely will scale. Is some of the demand for Tesla limited just because of Elon Musk? Yes, I think that's also true. But if you have the best product out there, you're going to sell a lot of something if it works well and if it's at an attractive price point. And I think it will be, because, I mean, scale is the hardest thing as it relates to the humanoid robots. Plus, the way that whole ecosystem, very vertically integrated, is, like, they're going to succeed there, but it also is going to take a lot longer than Elon Musk has indicated. Of course, part of his pay package is also related to humanoid robots too. So robotaxis, I'm not as bullish and excited about. It'll take a while, and then there's a lot of regulator pushback, I think, that will be happening and has happened as well. That'll kind of slow the ramp there, but there'll be multiple winners rather than a winner take most, which I think Tesla might be. So I'm treating it, as far as sizing in my portfolio, as a pre-revenue biotech stock. It's not that, but that big next growth driver is too far out to really price too much in here. And I think the price is, I mean, it doesn't trade on fundamentals anyway, but it's pretty expensive here. So if there's a big pullback like a Q4 after in Tesla, and we're not seeing that in the market, I will add a lot to my position. It's actually my number one increased position as far as sheer amount of money in 2023. So I'm not bearish Tesla. I own 2 Teslas, love the company, love Elon Musk. That's how I see it. What are you seeing in terms of the chart?
There.
Art?
So basically, this thing it's like a big giant accumulation. Hi, can you hear me?
Hello? I can. Yep.
Okay, sorry. Yeah, my internet might not be the best. It's basically a big giant, like a rounded thing over here. It's like it's basically accumulation zone the entire time. There has been enough push up previously that needed to be deleveraged. The deleverage has happened multiple times. There are enough strong hands that still believe in Tesla, and there has been increase in institutional accumulation in Tesla as well, if you look at the data. So people believe in it, and it's enough to push it to above the previous cycle high here. It closed September above it. It closed October above it. So far, we're starting November above it. Last time we didn't. We got rejected here. There's still some sellers here at this level, but right now we're getting geared up to try to consolidate before breaking up higher. I think that's the story. There's so many different stories, and if speculation comes into play, if there's increased liquidity, if Rocket Lab's going up, if like quantum plays are going up, if Dogecoin is going up, I think there's going to be speculators coming in for Tesla, and it's probably going to drive the PE up higher. That's kind of my way to look at it. So it all goes on cycles, and I think that the truth is this: if there's enough liquidity coming in, at some point they're going to use the money and they're going to innovate. And at some point, some innovation is going to hit, and you're going to end up, having a pretty good story to kind of back up the valuation potentially. With a company like Tesla, you already have a pretty well-established model. They're allowed to do more, speculations in terms of what they want to innovate, things like that. So I think that there should still be room to go up, and that's what the chart is showing here. One other thought too, in terms of that, is like people always worry that AI is going to take over all the jobs, right? I think robotics and like you have the AI, you have the language model, you have all these like theoretical stuff that can like they can write papers for you. They can do like language model. They can take over Duolingo. Duolingo can take over whatever. But like the actual like robotics, I can't get anybody to come out here and clean my gutter. Like I don't think AI is going to solve that. I need robotics. Like
Yeah.
and we need to speculate on a company like Tesla to be able to do that. Like it's interesting. I think like there's like a white collar recession where people are kind of getting laid off, but like blue collar jobs are actually fine because I can't get anybody, like I have to overpay for a plumber to come out and fix a toilet. I can't get robotics to do that. They can't fix my roof. They can't. But the closest thing I think I can think of is really Tesla. And this is really the one company that has kind of come and shined through. And I think speculation is there, rightfully so, in a way, if liquidity comes in. So.
For sure. All right. No, that's awesome. And I want to thank you, by the way, for joining us today. And I want to show, just in case there's a lot of names you guys asked about. If you do not follow this man on X and you're on X at all, I recommend following him, at Canton Meow. He does this sort of thing all the time, interacts with his community. So if there's a name you're interested in from the technical standpoint, follow him, ask, and he's guaranteed to chart. And no, I'm just kidding. But he does love to do this for a lot of people in the community. And he posts a lot of charts up there, including names that we haven't looked at yet. I do also want to just add really quick on this comment, not necessarily from too detailed in it, but VGA is my newest holding. Invest, then investigate is a Stanley Druckenmiller thing. Basically, I've done some due diligence. I've talked to some people there in the field. I think LNG is a good opportunity. VG is not the only name there, but it is one that I think that there's probably more risk, but also more reward. A major project of theirs is coming online. I think LNG is probably the easiest growth play that the market is not pricing in at all as far as energy. So VG is something I'm looking into. Now, as I look, I might say, you know what, never mind. I have a higher conviction than other things. This process, usually takes me a couple of months. And so I'm just beginning to dig into that, but that's what I'm thinking there. Any last thoughts, Kat?
Well, I just want to thank you so much for doing this. I think we should do it every quarter to kind of touch in. There's a lot of folks only focus on the fundamental side. A lot of folks only focus on the technical side. The reality is probably somewhere in between. I think one does reflect the reality of the other. So it's actually kind of fun to do these things with you, man. We should keep going.
Yeah, absolutely. Love it. All right. You guys have a great weekend. Thank you, Kat. Thank you, everybody else.